Hello everyone. So today we'll be discussing about option chain analysis and how to find out the market direction using the option chain of any stock or index. So first of all, I have opened the NSE website. So here we are seeing the option chain of Nifty. So here this is the option chain for the current week expiry. So date is given here 9th February. Like we can see here the option chain of various dates like current expiry in upcoming weeks that we all know like that. So monthly expiry. So the main thing in this option chain is the open interest and change in open interest, and the volume and IV also we need to see. So basically main thing is change in open interest, which it shows the intraday activities, what is going on. So whenever we are analyzing the option chains, first of all we have to see the strike price. So at which strike price there is the highest OI buildup, either it will be in the call side or in the put side. So here we are seeing that the Nifty closed at 17,854. So assuming that the current live market is going on right now and we are assuming that Nifty is running at this price. So we have to select the strike price 17,850, which is at the money, and we have to see both the call and the put sides. So what is the open interest among all the on both the sides of this current strike price, so which is at the money. So 17,850 we are seeing here that in the call side it is change in open interest is 5,438 and the put side it is 9,324, and in the put side we are seeing here that in change in open interest column we are seeing that at every round number like 17,800, 700, 600, so there the open interest is very much higher, like here it is 63,000, here is 86,000, 29,000, and in the call side also we can see here. So in 17,900 it is little bit less, but in 18,000 it is 38,000, 18,100 is 36,000, 18,200 it is 40,000, 18,300 37,000, like that. So basically the change in open interest shows the activity of the option writers, so what their position they are taking for intraday, and the open interest is a cumulative number, so it will expire, it will end only on the day of the expiry. So in any other day if you are seeing it, so you will be seeing that this amount will keep on increasing or decreasing based on the change in open interest. So before the market opens at 9:15 a.m., so if you start seeing this option chain, you will see that this column will be 0, volume will be 0, change in open interest will be 0, but this OI column there will be having some number, means it is a cumulative number, means it keeps on increasing and decreasing on a daily basis. So suppose it closed at this strike price 17,850, suppose in the call side suppose it closed at around, here it is showing 18,753, so suppose it closed at 20,000. So next day in the morning when you will open before 9:15 a.m. you will see the change in OI, it will be all 0, but that previously what number was there here, that number only will be here, then it will continue from there, means it will either increase or decrease. So like that the open interest, it shows the range of the market for the entire week in a weekly option chain, and if it is a monthly option chain it will show the range of the market for the entire month, like whichever side there is the highest open interest. So here we can see what is the highest open interest here. So in 18,000 it is 1 lakh 18,000, 18,500 it is 1 lakh 11, and downside no more. So 1 lakh 18,000 is the highest open interest among the call sides, means for this week, so the 9th February expiry. So this left side, this 1 lakh 18,000, this is the highest open interest among the call sides, means the call sellers, the call writers have made the highest open interest here position at this strike price. So this will be the resistance for the market. Same way in the put side if you are seeing, so in the downside here we are seeing 17,600 is 1 lakh 27,000, then again 17,700 is 1 lakh 3,000, and in the downside no more are there. So in the put side, so it is the highest open interest is at 17,600, so this will be the support. So for this current week the range for the market is 18,000 on the higher side and the downside is 17,600. So that is for the entire week. So but if you are doing an intraday trading, so you have to see the change in OI. In this column you have to see where the highest open interest is building. So here you can see the 17,700, this here this 86,000. So here you can see that this is the highest open interest building here. So we can assume that this will be the support for today, means for intraday trading. And here in the change in open interest in the all side, we are seeing here that here it is 38, here it is 40, but the highest is here 86. 86 is more, 63 is more, but these numbers are less, 38, 36. So you can see that the call side, the Y is, some quantity is there, but it is less compared to the put side. The put side, the Y numbers are higher, 86,000, 63,000. Means the put traders are more active, means the quantity is more, number of contracts here it is shown. So it is more in the put side, means when put sellers are active, means the market is more likely to go up. Had it been in the call side, see if these numbers have been higher than the put sides, so then we can say that the call letters are active, then the market is supposed to go down. So the same thing without seeing this option chain also, you can see it from the Sensible website. So this is the home page of Sensible. So if I am opening this open interest analysis, so this column will come here. Here directly we in NSE website we were seeing it from like the option chain, but it was very difficult to find out, like we have to say it manually which number, which strike price, which is highest, will to calculate like that. But in Sensible here directly you can see this. It is shown through this graph, through this bar chart. So here you can see that 17600 green, this bar is the highest. Then next is this one 7700, then 17500. So you can assume very clearly and very quickly you can understand that 17600 is the support, and this one 18,000 is the resistance for the market. This is the open interest chart, and this is the for the week, for the entire coming week. This is the range. And if you are seeing the change in open interest for intraday trading, so you can see that here 17,700 it is having the highest open interest. So what we discussed here, here we have seen that 17,700 highest open interest in the put side is 86,000 and 17,600. So directly from this chart here you can see directly from bar chart. So very quickly you can understand like which is the highest open interest. So here you can easily understand that the green bar it is the highest, the biggest one. So the put traders are active, means the market is likely to go up. And here so you can see in the downside some red bars are going down. It means that these correlators are exiting. Means whenever they are making any new position, it will be on the upside. Means the Y is increasing. But whenever they are exiting, means they are closing their positions, so it will be decreasing, means in the downside. So here we can see that the correlators are doing some short covering here. So here also is this one, the strike price is 17,600, 17,500. Some correlators have exited. So here you can see 17,600 here. You see minus 16,000 it is given. 17,500 minus 12,000 means these correlators are exiting from the market, means they are in loss now because the market went above their strike price. So they come in the money, means the price has increased here. So the purpose of seller is to be always out of the money, means they would like to make their means premium zero. So they want the market to go. If they are correlator, they want it to go down, and if they are put trader, they want the market to go up. Only then the puts price premium will decrease if it will go up, and if it is going down, then the call side premium will decrease. So that way they are doing the thing, but whenever it goes against their direction, so then they start having unlimited loss, and that time they what they do, they book the loss and exit, leading to more short covering rally. Means suppose if it is a call letter, means they are doing call selling. So if it goes above the strike price, so they will be loss. So what they will do, they would like to book their loss, and what they will do that they will give the buy order, means the seller will try to give the buy order and try to exit. And when they are giving the buy, so then there will that will create a lot of call buy orders in the market. Because of that the market goes up and a short covering is generated here. Same way in the put side. So suppose the put traders, their intention is for the market to go up, but if it goes down, it goes against their direction and below the strike price, so they will start having unlimited loss. So what they will do, they will try to do some short covering, means and they were doing put selling, so they will do put buy, so and they will try to exit. So that creates a lot of put buy orders in the market, and that's why the market goes down. So that way it works. So here one more thing is there, this multi strike OI. So if you click here the multi strike OI, So here you can see that for individual strike prices like what we have discussed here now. So we are saying that 17600, 17700 is having the highest and this change in OI in this for today's, that is means in intraday. So this thing, if you want to see it here, so you have to click here, it is multi-strike OI, you just click select all. So it will show all the strike prices which are currently active, which are having the highest open interest. So 17700 was having the highest open interest. So here we will see. So for 17700, here we can see, here see this one, 17700 PE. This blue line you can see here, it is given here 17700 PE 9 February. So from bottom see how it is going up, and up, here it is going up like that. And this green one also, that is 17600 PE, it is also going up. This is for every 5 minutes it is showing. So seeing this chart also you can find out that it is very easy, means you can track the individual activity of each strike price. Means in option chain, if you are seeing this value, you are seeing that it is currently 17600 P is 63,000. So after 5 minutes again, if you are seeing, you won't remember like what was the price 5 minutes back. So if you are writing it, then it's okay, but it is very difficult to maintain a record here. And so many strike prices are there and the price keeps fluctuating, the open interest also keeps fluctuating. Means it will be a different number after every interval of time, like after 1 minute, 2 minutes, 3 minutes, 5 minutes. All these values will keep on changing in both sides in every strike price. So it is very difficult to keep a record what was the price at the current strike price, means 5 minutes back or 2 minutes back or 10 minutes back. So for that reason we see this graph. So this graph is very helpful. So you can find out which are the strike prices which are currently most active, so which are having the highest open interest among the call and the put sides. So from this bar we found out that 17700 is having the highest activity. Next is this one, 17600. So here in this graph also you can see that this is because this is the closing I am showing. So currently at the closing 17700 was having the highest, 17700 PE was having the highest one, 17600 PE and 700 PE. So here it is showing, and the black one is the LTP, means the Nifty spot price it is showing along with the open interest graphs. So here very easily you can track. So this was the time like around on February 2nd. So last 3 days it is showing. So like today in the afternoon, like you've seen that this there was a sudden change in the market. From bottom it went up very much. Suddenly there was change in open interest in the interruption chain. So earlier in the morning the call letters were active. See here, the red one, the 17700 C. February 3 at 10 a.m. See, it was this red line was at the top. Means whichever lines are at the top, no, then those are the dominating ones. Those strike prices are having the highest open interest, and those are dominating. Means currently they are ruling the market. So here in the morning you can see all CE, the 18,000 CE was there, and this one 17600 PE was also there, but mainly 18,000 CE was at the top. Then again 17700 CE, third one. So means the call orders were very much active in the morning. So the market was going down. Then after that, at this crossed here, see this red line came down, this 17700 C came down, and 17700 P went up. 7600 P also went up. So both of them went up. So this was the time when the market changed around 12:15 p.m. It was the time when the reversal came in the market, and in the chart also the Nifty broke the 17735 level. So I'm not showing the chart, actually just this from the open interest we are trying to understand. So here we can see that this morning when the call letters were active, suddenly they started giving up. The graph started to come down. This red one came down, this one also came down, and this green and the blue one they started to go up. This 7600 700 PE means the put rate has started to increase, means that's why the market started going up. So seeing this graph also, it is very easy to understand like so what is going on in the market, so who is taking control. And I also use one more website, that is Obstra. You all must be knowing this website, Obstra analysis. So here also the same thing only what I explained in the sensible chart. This chart, this open interest and change in open interest, both the bar charts which are shown here. This one and this one is combined here. It is given only here, and the PCR also you can see the same thing what shown in sensible, that here also you can see the same thing. Means here at the end of the day we are seeing that these red columns are means for the puts and the green ones are for the calls. So it is showing at every strike price. Same thing whatever it is given here, no? Same thing here. For every strike price. So everyone was asking me like they are having some difficulty understanding this thing. So it is very simple to understand. The top one is the open interest and the down one is the change in open interest. So if you want to understand what is going on currently in the market, in live market, in intraday, so you need to see this lower one, this change in OI, this column here you have to see, then the bars you have to see which one is going up and which one is going down. Here we are seeing that the red bars are going up, means the put writers are active here. 17700 is increasing, 17600 increasing, 500 increasing, and these call writers are going out, means green color, but it is downside, means they are exiting, closing their positions and booking loss and doing short covering here. So here 17600 C is going out, 17500 C is going out. So this clearly indicates the sentiment of the market, that currently the put traders are dominating, the red bars are higher, and intraday in live market we can assume that the market is going likely to go up from here. So same time when you are analyzing the weekly chart, you should also see the monthly option chain also. So here also we have to see both, we have to see together simultaneously. And monthly also you are seeing that there is a big change going on here. 17500, 600, 700. From all these strike prices, the collators are exiting in big numbers. And here one put unwinding was there. Unwinding means if you are taking in a long position and exiting, it is called unwinding. And if you are taking in a short position and exiting, it is called short covering. But both are same thing only, means you are booking the loss and going out. So if it is in the long side, because the put writers, their direction is on the positive side, so it is called unwinding. And if it is going down in the negative side for the call writers, it is called short covering. So here we are saying that the 17,000 P, some put writers are doing unwinding, means they are exiting, they are booking some profits here. But main thing is here we can see that the green ones are going out, the call writers are going out, and the put writers are increasing here. And how I find out that whether the current strike price some straddle or strangle is going on. So if you're seeing that at the same strike price, suppose this one you are seeing here at 18,000, means the red and the green bars are very much nearby. Here it is saying, I'll show you from the option chain only. This monthly option chain will open here. For 23rd February, 18,000 strike price we'll see here. Here is saying that here OI is 58,000, here is 44,000, little bit lesser is there, but if they are very much equal, like same number, like 58,000, 56,000 like that, and we can say that the short straddle is active. So this was actually active only on the budget day. So currently this red bar has gone down a little bit, means the put writers have decreased a little bit, but here one straddle was active here, a short straddle. So this combined premium here, you have to see how much it is. 18,000 it was 150, here it was 273. So round figure around 420 to something like that. So the break even will be on the upside. Means suppose everyone knows how to find out this break even for the short straddle. Means in this combined premium you have to add 150 and 270, that is 420. So add plus or minus with the spot price, means 18,400 it will be on the upside, 18,000 plus 400, and on the downside it will be 420, that is 18,420, and on the downside it will be 18,000 minus 420, that will be around 17,580 it will be. Yeah, so 17,580 to 18,420, that is the range of the market for this current month, means for the entire month. So those are taken the short straddle, they would like the market to expire within this range. So as long as the Nifty is within this range, they will be profitable. So whenever you find any straddle here, like same strike price red and the green columns are very much equal, and from here also you can see, and the column on the put side is the Y open interest values are very much near similar, so we can assume that one straddle is active, and so just you need to add this to LTP, last traded price premium values of the call and the put side. This total whatever it is, you plus and minus with the spot price, so that you will get two values. So those will be the range of the market. So whenever market is coming nearby on the lower side, you can take that as the support and we can buy from there. And whenever the market is going up on the upside, we can take this as the resistance and we can short from there. And in the middle part, like their intention is to stay at this price only. So no matter when market goes, on the expiry day they would like the Nifty to expire at this strike price only. So they will want to Nifty to expire on 23rd February at 18,000 or near 18,000. So that is the main motive. So if we are doing option buying, so we just need to find out the break-even points and we need to take the reversal trades from there. So if it is going down, we are taking a buy from the bottom, and if it is going up, we are taking a short from the top. So this is the main basic thing, so nothing else is there. So this principle you can use. This graph will be very much helpful for you to find out the intraday position of the strike prices, like activity from this chart. Like you can see the graph, so that will tell you very clearly like at which strike price what activity is going on, and this graph will tell you like whether the Y is increasing or decreasing for all of the strike prices here. All the major strike prices we can see here, whichever are active on intraday. So in time period you can see 5 minute, 15 minute, 30 minute also. So that will, for last 3 days it is given here. So that will be very much helpful to find out the market direction, and this graph will tell you like which ones are exiting here. Means from this chart also you can say that they are exiting, means it is coming down this, but exact amount you cannot say, means what is the correct value that you can say from here. Like here it will be all details is given now. See here it is given call OI change minus, put OI change minus, means these are going out. So put OI is going out more. It will tell you how much value it is going out like that. And seeing the length of the bars, we can easily tell that 17,500 is the highest support for the Nifty for the monthly chain, that is, and the resistance is 18,000. So 17,500 to 18,000 is the range for Nifty as of now for the monthly, and for the weekly it is, I've shown you earlier, that is 17,600 to 18,000. So here it is 17,600 to 18,000, that is. And in the intraday it is showing that the put on the put side the Y is increasing, means the put traders are increasing, which the market is likely to go up, and it can go up to 18,000. So that's all, nothing else is there. So it is very easy to understand. So if you go through this video 2-3 times, so very clearly you can understand how to analyze the options in data. So basically I am using the NSE website, Sensible, and this Obsta. These three websites I am using, and intraday using the change in OI. Change in OI you can see, and you can find out everything. Like this graph will tell you what is going on in each strike price, the Y activity, and this bar will tell you like at which strike price, means the call letters and the put letters are exiting or they are increasing and adding their positions. So that's all. Nothing else is there. The same thing is given here also. So hope you all understood everything. So if you have any doubts you can ask me. So thanks a lot for watching this video. So see you again. Bye bye.